returns to us? What are the things that we expect to see in the returns? Assessment and compliance. How should we assess? How should we monitor? Enforcement. Yes, people will not, they will not just comply. There must be a mechanism for enforcement. But the enforcement we are talking about here is not the enforcement that we are used to. It's not chain and padlock. Chapter 3 is talking about general administrative provisions. Chapter 4 is talking about offenses and penalties. And chapter 5 is talking about miscellaneous provisions. So, key functions of tax administrators. Please take note of this. Very important for every one of us. What are the key functions? What are the key things that we need to do? We're supposed to register taxpayers and maintain a very good database. We're supposed to review taxpayers' returns. They will file returns to us. Are we supposed to just collect the returns and keep? No. We will pick the returns and review. Then after reviewing the returns, the next thing is assessment. You have reviewed the returns. Somebody can come and do self-assessment and submit his tax alongside with his returns. It's allowed, right? But when the person submits, it is our duty to now review that and see if the person actually paid the adequate tax. If not, the action that we are going to take, we shall talk about it. Then tax collection and accounting. If you collect, whatever you assess, you go collect now. Abi? You must collect. But when you collect, you must account. It's just not the others. Okay, yes, I collected 15 million last month. Fine. How did you keep the record? Is the record available for further operational duties? Because where your work stops, that's where some other people don't start. If you don't keep records, then you are already causing a lot of trouble for the other people that will work on your system. Then we have enforcement and compliance. When the person don't comply, you will enforce. The enforcement stuff will be discussed during the discussion. Tax education and sensitization. This period that we are now is very key. This is very, very key. Tax education, tax compliance. Tax sensitization. Many people don't know what you are talking about now. There are a lot of misconceptions in town. There are so many things that are happening that, seriously, when you hear it from some quarters, even some educated people, I'm not talking of market women and artisans, some educated people will tell you, yes, with this tax law is saying that we should not pay tax again. How now? So we need to educate them. Audits, investigation, and monitoring. These are our duties too. My people in tax audit department, they understand what I'm talking about here. Monitoring is our work. Everybody is monitoring. You that assess, you will monitor. Abi? Some people will still monitor you. That's why we have ZTOs. They will monitor you. Then, the ZTO will do their work too. Then some people will still monitor them. And chairman will monitor everybody. You can see. So there's no hiding place for anyone. If you don't perform, I don't talk my own. Policy implementation and advisory. Tax revenue authority, tax administrators, we have to come up with some policies on how the tax environments will be managed. Tax disputes reconciliation. There's no how we not have disputes. Especially this time around that we are just doing best of judgments. I will not agree. I will shout. But when I shout, it is your duty to calm me down and tell me, okay, don't shout too much. okay, go and bring this, go and bring that, go and bring this. But then you tell him to go and bring all those things that he will not be able to submit. You say, okay, let me just pay. You're too much. This is practical. This is very, very practical. It's something that has happened to me several times. So, interagency collaboration. We need to collaborate with other agencies. It's very, very, very important. If we don't collaborate, you know why we have to collaborate? Because the data you have that we have in internal revenue and data they have like in a place like Bureau of Lands is at par, just like this. Why? Somebody is coming to you to say, I am a farmer. And is coming with one kind of cloth that you will say, but if you ask, just take his name, his detail to Bureau of Lands and say, please, help us find this man out. You say, this man, he has 3 houses in GRA. He has 4 at Adebayo. So you now see that if we don't collaborate with ourselves, we are definitely going to have issues because we'll be under-assessing and under-collecting. And the people will now be laughing and say, should we want to money? You know? So, but we are wise. Let us put that our wisdom into practice by collaborating with other agencies that can give us information. So data sharing is very key. We must share data. We just have to. We are already into it, but it's not enough. We need to do more. So PIT, please work closely with MDA. It's very, very important. Tax audits, data intelligence, all of us need to work together. In fact, even within ourselves here alone, leave the agencies, EKIRS alone, department by department. Are we sharing our data? Withholding tax, we have his own data. PIT, we have their own. Tax audit, we have their own. Let's collaborate. That's the only way. So let's go. Then we now have reporting and accountability. We must report for every work that we do on monthly basis. We report. We give accounts. Governor is always waiting. Oh yeah, this time around. We must give a figure. Not only figure, we must explain. What do we have to explain? October, we had 2.35 billion. November, we have 2.27. That's a drop, right? So if you tell Mr. Governor, in October, Oga, we did well, 2.35. And you now go in November and say 2.27. And you don't want to explain. You go explain entire. Because the man will definitely say, so what happened? So that's why the report is very important. Accountability is very important. Unfortunately, the December report is a little bit lower. But I'm not telling you because that is the jurisdiction of the chairman. But please, we did not do well in December. I just want to tell you that. We did not do well. When the chairman wants to address us, I'm sure he will say something about it. So, let's go. No, please, calm down. January will be good. I'm already seeing the sign. So let's walk with that faith. Let's go all out. We have taxpayers that are owing us. We have defaulters in our system. Why don't we go after these people? Abi, you cannot access now because people are supposed to be filing returns. Abi, for PIT. Abi, no, so? I won't talk more than that. So, the key implication of NTAA, National Tax Identification, Tax ID. Every taxable person, state and federal MDAs, including local government, shall register with the relevant tax authority and obtain a taxpayer identification, which is called tax ID, for the purpose of compliance with tax obligations. So invariably, that one is very key. It's a straightforward statement. Everybody, including MDAs, including states, including local governments, must have tax ID. And what is it used for? It's going to be stated in every correspondence, every transactions of that have to do with taxes. I want to file my returns. I'll put my tax ID. When assessment is going to be done, it will be with your tax ID. When you are objecting, it must be with tax ID. And like that, then it will be a condition for entering into any contract with any federal or state MDAs. If you don't have tax ID, the states, local government, or any MDA is not supposed to grant you your request to be a contractor. There's a penalty for that, even on the side of the MDA. If you don't go with that, among us here is somebody that knows, he understands penalties, offenses and penalties very well. So it's going to be in the discussion, and we might hear more from him. For banking, insurance, and stockbroking, and other financial services, all these people need to have tax ID. Another thing that is very key, when you now have your tax ID, you know the tax ID that we are going to be having now is a unified tax ID. Why is it unified? Before now, you have tax ID in Lagos, and Lagos call it, Lagos call it taxpayer ID. You come to Ekiti, you collect EKIRS if you transact any tax transaction here. And like that, if you go to FCT IRS too, we come and give you tax ID. So we now have several, one person will have like 5, 6 tax IDs. And the 6 tax IDs are not communicating with each other. So the wisdom of the government in the reform now, that we are going to have unified tax ID, which does you have only one that can be applicable to any state of the federation. So because that has happened, that's why we're having the next point, a notification of change in particulars. As at the time you are registering in Ekiti, but you have a unified tax ID. On the unified tax ID, when you open it, you now see that this person resides in Ekiti. Now you now relocate to Lagos. Yes, the tax ID you have is one. But when you are in Lagos and you did not notify the people, the relevant tax authority in Lagos, they will not know that you are there. Ekiti will be looking for you, they can't find you. Lagos does not even know you exist. It's an offense not to declare. You just have only 30 days after your relocation. Please tell your taxpayers that this is very, very key. So they will have to notify the relevant tax authority that, oh, I've changed my address, or I've changed my name. Our sisters, when they get married, Odukoya now bears Adeyemi. So you need to tell the tax authority, oh, my name has changed, so that they can be able to update their records. Supervision, suspension, the registration and cancellation of tax ID. When somebody who has registered, you have registered for tax ID, you already have it, but your business now has issue. It's not our portion, no. We're just talking, no. I'm an optimistic person. I don't want anything bad to happen to anybody, but the business want to collapse, or the business is having some issues. Then the business say, okay, I want to cease operation for that. I want to suspend my operation. You need to notify that, yes, me, so with this tax IDO, I want to suspend my operation for some time. I will notify you when I'm back. The revenue authority will know. They will come and inspect. and they will stop assessing you, because if you don't notify them, even when the shop is locked, they will come and paste assessment on your door. Nobody so we they do them. So it's better we they will have to notify us. Please let us tell them. They will need to notify us that yes, something is happening and this is what you should know. Income tax returns for individuals. A return of income shall be filed and in a prescribed form with RTA. Do we know RTA? RTA. Revenue what? Relevant Tax Authority. Please don't disgrace me here now. So in each year of assessment and without notice or demand, this is very key. It has been in the law before. The returns, it's not compulsory that we have to notify taxpayers to say, come and file your returns. Oh, no. But if we do it, no crime. We are helping them. But if we don't do it and they did not file, the penalty will stand. They can't come and stand and say, hey, but you didn't remind me now. It won't work. So, every taxable person, whether or not liable to pay tax and whether or not liable to pay tax, that is, even if you are not supposed to pay tax at all, you must file. Are we getting that? Even if you are not supposed to pay tax, because with this threshold and all sorts that we are talking about now, people will say, Shebi me, some woman, why should I file? You must file. If you don't file, there's penalty. Penalty does not know threshold. Then, non-resident person liable to pay tax in Nigeria under Chapter 2 of NTA. A non-resident person that is not living in Nigeria, but have significant business presence in Nigeria, and it has been said that that person must have tax ID. That person too must file returns. Even despite that you are not staying in Nigeria. You don't file, you get penalty. Income tax returns, individual, section 13. This one is telling us what a return should contain. What a return should contain for individual. A duly completed self-assessment form. When we say a duly completed self-assessment form, that might be saying different things to us. What we know most here is Form A. Abi? We are saying the same thing. Because Form A, you will declare a lot of information. My children. How many children do you have? Which school are they going to? Are you living in your house? Do you rent house? How much is your rent? Then you now say, your business. Okay, my business, I'm a salary earner. This is how much I earn. I do side hustle. I sell wares. This is my profits and all sorts. So you are declaring your income in the Form A, right? So a step ahead of that is to have yourself assess yourself based on the income you have declared, but it's not compulsory. If you don't declare, if you don't assess yourself, no problem. We help you, we assess you. But if you assess yourself, you are making the job easier for us. You assess yourself and pay. So it's expected that a taxpayer will self-assess, but if you don't self-assess, no problem. A duly completed self-assessment form, or let me say a duly completed Form A. The amount of income from every source for the year preceding the year of assessment computed in accordance with the provision of NTA 2025. This one is going to be applicable next year because we are using Peter this year. Abi? God bless you guys. So, in the case of income earned from trade, business, profession, or vocation, though that one, PIT, payee will be that, Abi? But you're not filing the returns of payee of 2025 in 2025. You are filing in January, of 2026. You are filing in January 2027, right? So everything that they are talking about here is going to happen next year. That number 2 there. In the case of income earned from trade, business, profession, or vocation, an audited financial statement or a statement of accounts attested to by the taxpayer. You must be, you see, when you are trying to show yourself, like Yoruba will say, tí a bá ń yan ẹ̀pà fáfọ́jú, a máa ń súfèé. Because if you don't, when you are doing, if you are eating something, you can't whistle. You are chewing and you want to whistle. 2 of them cannot go. So transparency is what they are asking for there. If you are filing your returns, please support it with documents that will make us to know that, yes, this person is telling us the truth. It's not just for you to say, I don't make profits. How? So then we now have personal relief and tax computation, evidence of payment of taxes. These are the things that we will expect to see on the returns of an individual. So let's go to payee. Now, an employer shall file. The other one, the taxpayer shall file. This one now, an employer shall file. Do we get the difference? We get it, right? If you are not in PIT and this is not clear to you, please note it. You can send the question when the discussion starts. You don't understand why we are talking of taxpayer and we are talking of employer. There are 2 different things. So employer will now file returns for all the employees, not later than 31st January of each year in respect of all employees in the employment in the preceding year. 2025 returns is being filed now. It will expire by 31st January. And by 31st January, maybe by 1st of February, whoever that has not filed, there are fines and penalties and everything that they will pay. Plenty of it. But the new tax law has made it a little bit mild, so it's not as became before. But if you keep on defaulting, then it will be increasing. If you keep on defaulting, it will be increasing. So the return shall disclose for each employee gross emolument, that's your gross income, including allowances and BIK. Please, what is BIK? These PIT people no go let person rest. You should have less throw taxes people to answer. So, total deductions, net emolument, and tax deducted. Your payee, your salary, your gross salary, the deductions. Then we now have net pay and the tax deducted must be shown in the returns. Notwithstanding the provision of section 14, please let's note this one very well. An employee shall file an annual return of income from all sources, including employment income in accordance with section 13 of NTAA. We just talked about section 13, that an individual will file, right? Then section 14. Employer will file. There are some people that section 13 and 14 affects. We that are here, majority of us have side hustles. Majority of us. Now, the law has said that we should file returns after the employer has filed on our behalf, strictly on our payee. But some of us that are photographers here, some of us that are selling wares, that are selling Ankara, we they see them on status, we they see them. Some of us that are selling baby things, we have so many of them. It is expected that after this January, before March, all of us file our individual returns from all sources. Some of us are event planners here. Some of us are social media influencer. We plenty. So please, and this, I'm saying this now because I want to emphasize on it. Charity, they say, begins at home, right? If we don't disclose, what moral justification do we have to expect others to disclose to us? We are going to monitor this closely. Seriously. If it affects me, I go pay. So please, if you are called upon, if you don't file, penalty stands for it, wait for you. I'm not joking here, please. PIT, please take note of that. Everybody must file, yes, including the chairman, yes. Oga said he will file. So, let's go. Simplified annual returns, section 15. Because of the informal sector people, are we following? Because of the informal sector people, the Form A that we have might not be suitable for them. They cannot even declare their income. They don't even know how much they earn because they don't have records. So section 15 is now saying that, okay, we recognize that the people will not be able to file returns. They will be able to give us the way we want it. So it has not granted the relevant authority, especially the state authority, to simplify a return format that will be suitable for the informal sector. Ekiti State has done that. I'm glad, I'm very proud to say that. Have we not? We have done that. We're always the first. Are you aware of that? We are always the first in the subnationals. And we give thanks to our chairman for the leadership that is given to us. We are always charged to be the first. Let me give you one simple secret that you are not aware of. Before the tax reform, before at all, when we were just hearing it like, there's going to be tax reform, our chairman has already set us up to start working towards it. As at the time the law came up, when the bill came up, the bill was sent to the team digests the whole bill, even before it turned to law. And that's why you can see me talking about the law here, because we have already been thinking and working on it, thanks to the chairman. Some states don't even know what tax reform is as we speak now. But we are loaded. And that's why we are sitting down here today. Everybody. Okay. Some of us are admin staff here. When you talk of tax, it's not their business. Their own is to come and ask, but when you get back to your house, your neighbor can come and knock your door and say, Auntie, maybe internal revenue legislation. Please, I don't understand this. Can you explain? Will you not tell that person that I've been Mumawa? So, that's why all of us, every one of us must know this. And please, even if you're an HR, even if you're an HR staff, I'm saying it, you can be moved to PIT. So get prepared. I think I'm communicating. So I've talked about the simplified returns for virtual assets service providers. I told you that these virtual assets, cryptocurrency, Bitcoin, blah, 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 they say it's not visible. You can't trace it. Is that not what they said? But we now have regulatory agency, service provider that have been registered. So before you can engage in such activities, you must have registered with this organization. So the organization is now asked to file returns. So you can see there's no hiding place. They will have to file returns and they will mention all their customers. This person, this is how much he has. So let's get prepared. Return for deduction of taxes at source. When we say deduction of taxes at source, what does it mean, please? What does it mean? Deduction of taxes at source. Withholding tax, thank you very much. That's where I'm driving at, withholding tax. So when you are filing your returns, they are telling us here that as you are filing your return for your income, please file the one that has to do with your withholding tax too. We must have information of every aspect of your tax in your returns. These photographers, are you done? Information to be delivered by bankers and others. When we say bankers, we mean financial institutions. It's not only bank. Financial institutions, stockbroking firm, mortgage bank, all of them. What are the information that they need to disclose to the relevant authority the new customers that they have? Every new customer, they must report to the internal revenue. And the next one is existing customers. In the case of already I'm a customer, the law did not say they should start giving my information every day. But any year where my accumulated transaction amounted to 25 million as an individual, they will flag me. They will flag me. No, a year. Accumulated for a year. Then a body corporate, 100 million. They are telling me that my time is up, so we need to rush. Disclosure, you have to disclose. Tax planning. You know, tax planning is good. For some of us that have been CFO before, we plan our taxes very well. We adjust some things, and this is legal way, or not illegal. And that we call tax avoidance. Now, it is now mandatory that your tax planning, you must disclose to tax authority. This is what I want to do. You must. That's what that section is talking about. Then, accreditation of tax agents. Tax agents, for some of us that are in PIT, you don't see anybody just come in and say, I am representing Mr. So-so-so of so-so-so company. And you'll be wondering, Kilo Day. And even that are even coming to represent people, they don't even understand the system. So the new law now says that before you can even represent anybody, you must have been accredited by the relevant tax authority. So we should be ready. Anybody that comes to us, tell the person, go and register first before we attend to you. They send letter to us. Let's reply them that we cannot attend to you because we are not registered. And what is the aim of this? We want to be sure that qualified people are standing in for taxpayer. If you're not accredited, then let the taxpayer come and do his thing by himself. It's allowed. Self-assessment. I don't know. Maybe okay, it's just one slide. Let me explain this. Self-assessment of taxable person. Where a taxable person has delivered a tax returns, he has delivered a tax returns. He did not, default in that. What are we to do as revenue authority? We can either we can accept the returns without additional assessment if we are okay with it. We can accept the return and make additional assessments. And we can reject the returns. It does not satisfy our requirements and apply best of judgment. This is according to section 34, subsection 1 to 6 of NCAA. So that means that our BOJ has not, they have not stopped us from doing BOJ, but the conditions must be met. Am I communicating? So administrative assessment, this one too, you know what it means now, the best of judgment. Then additional assessment too. When we now said, okay, this person did not declare all his income to us, we now give additional assessment up to 6 years. maybe the person has not been paying tax before, or the person has been calling himself a farmer. We now discover that, this man is a manufacturer. We now do 6 years backlog. But if you find out that the person has even committed fraud in the declaration, then we can go beyond 6 years. We can do 20 years. Let him come and explain to us that, I just opened 7 years ago. Give us evidence. So that is what the power the law has given to us. A scenario question now. This one is going to be very fast. How do you reassure stakeholders that tax reform is about fairness, not higher taxes? This one we must talk. Who want to talk? Say something. Madam, just 2 minutes. We can't talk. This thing, I've said it here. Oh yeah.
So the understanding of all what you have been teaching us, as giving us clear understanding and the way we can really assure
now,
the stakeholders.
Tell me, I don't know. Tell me that I believe that is higher taxes. So convince me.
It depends on the level you are. If you are the one that is earning low income and you do not declare you don't take record of your businesses, so it might affect you negatively. But if you are the one that is doing all those things, it will not affect you. So begin to orientate them.
Do we agree with that? Me, I don't agree. But I have only 1 minute more. So who want to talk? Yes, yes. Come on, take.
For the in case of people come across, that it's only that those who concern the big men are trying to use us who have just little, who are earning just little amount of money. Now, if you look at the table show us the pay. Let me start from pay.
You want to train us?
Okay. Question. So there are some things, even maybe this month or next month now, there is going to be a little increment in the salary based on this new on the pay. Now, there is two on the businesses.
I am not. Can somebody else talk? Let her talk.
Simply put, to be able to tell someone that the tax reform is about fairness. First and foremost, if you have not been paying tax, I'm just putting this in a statement. If you have not been paying tax, you are likely to pay tax. Then secondly, if you have been paying tax before, there is every indication that your tax will reduce.
Thank you. So at this juncture, I think I want to say thank you.
Can we do better? Thank you for the very wonderful presentation. So we are going straight into the discussion. Meanwhile, I can see some people taking pictures while the lecture was ongoing. Don't worry, you don't have to bother about that because the slides will be made available. So we want to start the discussion session by introducing the discussants of the day. I'll be starting by introducing our Director, Planning Research and Statistics, Mr. Wasim Mohammed, as he comes onto the podium. Can we appreciate him? The second discussant of the day is our legal advisor, Mr. Adekunle Bayofati. Can we appreciate him? As well, we have Mr. Olusegun Ogunsanya, the head of Direct Assessment Department. Can we appreciate him? Also, we have the moderators of the day, is Emanuela Akiyemi. Appreciate her. And I'll be the second moderator of the day. So I want to urge us to sit, listen carefully. There'll be a section for questions and answers. And as well, there are gifts here available because I believe the chairman will ask questions from the discussant as well. So if there are staff members who get any question correctly, you'll be rewarded by the gift. Thank you. Now.
Good morning to us all. I hope we are all ready to learn. This is another part or another segment of the training. And one thing I want us to do is to try as much as possible to learn from whatever they're saying and try to write something down. Some people will be waiting for someone to start giving you slides and showing you what you should capture with your cameras or something. But you don't need that. You can learn from this discussion. And that is what I want us all to do. So this is how the discussion section is going to go. While we ask our discussant questions, afterwards, you're free to also ask questions on whatever they have discussed. Anywhere that seems naughty or that you have certain clarifications on, you ask them. And they are also free to ask you questions too. So it goes both ways. It's going to be an interaction section. Thank you all. So we'll be starting with you, Mr. Fati. All right. In simple terms, can you explain the changes in the Ekiti State Revenue Administration Law? And I know some of our people are not aware that the old BIR law has been repealed and it's no longer what we should be using. Rather, the law that has been signed, that is as at 23rd December last year. So.
Thank you, my learned colleague. I acknowledge the presence of the Executive Chairman of EKIRS and all directors present here and my professional colleagues. We are all aware that the Nigerian Tax Administration Act, which is the procedural law governing the collection of taxes, has been domesticated in Ekiti State. And it is no longer news that Ekiti State is the first state to pass this legislation at the state level. And that's why now we have the Ekiti State Revenue Administration Law. And the use of revenue there in place of tax is because at the state level, the law also governs the revenues of the local governments. That's why we use revenue. So it won't look as if it's just about taxes only. Now, basically, the changes are to bring the state law in conformity with the Nigerian Tax Administration Act. There are several provisions which our lecturer, our director has taken us through, and many of those provisions have been domesticated into our own state laws. The former law, which is the Ekiti State Board of Internal Revenue Law 2019, as amended in 2020, has now been repealed. And going forward, if you are writing letters, you're communicating with people, you shouldn't be referring to those old laws again. You have to refer to the 2025 law. I don't know if anyone has seen the copy of the law, maybe the electronic copy. Anybody? No. I think the HR will do that maybe after the training. The soft copy will be posted on the group because that is what we need now to do our job. Let me just run through some of the changes that are peculiar at the state level, subnational level. I will not be repeating some of the things in the national acts since it has been talked about. Now, at the state level, the composition of this board has changed under the new law. Initially, what we have is the law established a board and made EKIRS the operational arm of that board. But now, what the law is establishing is the service, and now establishing a management board for the service. Now, and that is why I don't need to, let me leave that part. We don't really, I just want to add that is why you might not be seeing me within the next couple of days as the legal advisor to the service. Under the new law, the legal advisor to the service will be the secretary to the service and is no longer going to be seconded from the Ministry of Justice. Now, let me talk about another provision that we need to also be aware of. There's this harmonized taxes and levies approved list of collection. It was actually sent as a bill. It was done by the Presidential Fiscal and Tax Reform Committee, chaired by Taiwo Yedele in conjunction with the Joint Revenue Board. And they sent that to all the states of the Federation to domesticate it at the state level. So that this issue of duplicity of taxes, double taxation, overlapping of collections by the states and local government can be put to a stop. The Taxes and Levies Approved List for Collection Act it has not been expressly repealed in the law. However, by judicial authorities, it has been deemed to be repealed. Therefore, we might not be able to rely on it going forward. And that's why we now have that new harmonized taxes and levies approved of collection in our law. It is the first schedule to the State Revenue Administration law. In respect to the revenue officers, before you generate bills, the harmonized bills this year, you must go to that schedule. You need to know the taxes, the revenue that have been harmonized at the local government level and at the state level. You also need to be aware that the rates, some of the rates have changed. You shouldn't just go to the template you used last year. You want to generate bills for schools. You shouldn't just go to that template that you used last year and just print it and start serving schools. No. You need to go and confirm and update all the rates in the collectibles before you serve bills so that you'll not be using the old rates in the old law. On the issue of enforcement, we are all aware now that the chairman has the power to sign warrant of district. We also have that in the new law. You need to go through the procedures in the new law for enforcement so that we can make necessary adjustments and changes to our operations. Then we also have the new law has also established revenue courts. It's been in the old law. The new one that is introduced is revenue mobile courts, mobile revenue courts. And the designation of a magistrate's court and a state high court as revenue courts, that one has been in the old law, despite the fact that none has been designated. But the CJ has assured us last year that this year the revenue courts will be designated. And we are also hoping that a mobile revenue court will also be established for the purpose of road taxes enforcement. You know, let me now talk about one of the things again in that harmonized tax and levies. Blocking of roads for collection of taxes is completely prohibited. If you mount any roadblock to collect taxes, there's now an heavy fine for it. I think almost up to 5 million naira fine for blocking road for collection of any revenue or tax. And that is where we need the use of technology to track many of these taxes. You should be able to know by just looking at the plate number of a vehicle, punching it into our system to know whether that person has actually renewed his paper for the year or paid his road taxes for the year or not. The issue of interstate haulage stickers has also been completely, collection of haulage fees for interstate movement of goods has also been completely prohibited, not completely prohibited. I will use the word suspended. It is prohibited by the law, subject to the haulage stickers that will be designed by JRB. And that's why I said I'll say it has been suspended. JRB is going to come up with the rates so that it will be uniform across the country. JRB is also going to come up with the stickers. So going forward, no collection of haulage for now. We're on interstate movement of goods. Now, under the law also gives room for the employment of special purpose tax officers, who shall have the powers of police officers. That one is in the federal law, and we have also domesticated it into the state laws. I think I'll stop for here. I'll stop here for now. Thank you so much.
Thank you. I just want to speak more on the new law and the domestication. With special reference to the haulage fee. The haulage fee has been, that is the emblem stickers that you have on the road, majorly. But in the tax and levy sent by the GRP, what will not be introduced for haulage fee will not be loading and offloading. That's what's in the tax and levy. But the modality for the operation has been said by barrister. That's what we are waiting for from GRB. So it's not be loading. There is a point of loading and the point of offloading. So that's what they'll be using, not that they'll be staying on the major road. And what the law states is that technology should be used to drive it. Thank you.
Change the mic. Change the mic.
All right. I said there are some concerns that the reform might increase tax burden rather than simplify compliance. So how valid is this, sir?
I think that has been answered, right? That was the scenario question. We discussed it, though there wasn't enough time to analyze it. So maybe this is the time that we're going to talk about it. You see, looking at the reform as it is, people that have been paying taxes before, let's take us, we here as example. We know how much our payee that we are paying every month. We know how much it is. By end of January, when salary will be paid, we will see the difference. Each and every one of us here, all of us, we have our tax reduced marginally based on the what have been displayed there on the board there. So if somebody is not telling us that it's increasing tax burden and the tax is reducing, the two of them are not the same now. Tax will definitely reduce. And that is even sending some fear into the mind of the revenue authorities. That if tax reduce, what happened to our targets? Are we not thinking about that? If tax reduce, what happened to our targets? What happened to our collection? What are we doing about it? Tax will definitely reduce. It's just the magnitude of the reduction that matters. Some work has been done at the back end to see what the effect of this tax will be on our payee. Taking the state civil service salary as a case study, we've seen the difference. And that difference, we believe that if we work hard in some other areas, we will cover that difference. And what other areas are we looking at? Our land use charge has not given us enough. So the management, we need to now put attention into that area. Our MDAs, the ones that are not performing, let's grab them and make them perform. So that the difference of maybe less than 100 million that we are going to be seeing on a monthly basis will be covered by the other ones that is not affected by the reform. So that is the way it is. But the answer to the question is that the tax burden has reduced. There's no increase in tax, and nobody should give us hot tea to drink in the name of saying that, we are ambassadors. We will definitely have to defend the system. So thank you very much for that.
Thank you very much.
In addition to what my Oga just said, we should see ourselves, when director just, during the presentation, he gave some of the functions of a tax administrator. We should see ourselves, one, as an enumerator. Enumerator is very key, one of the key functions of a tax administrator. You see, sometimes you go to the eateries, you go to the mall, the big supermarket, you see some expatriates moving around. Are they resident in Ekiti State? You see some businesses. There is one key thing when I started tax administration in Lagos State, that they taught us then is that anything you buy, you must check the address. Is it produced in Lagos State? If it's produced in Lagos State, the next thing is that go and check, is that business on the in our tax net? Let us adopt that. Anything we are buying, even the sachet water, check, is that name in our tax net? Who is the producer, the individual responsible for that? Is he that individual? Is he on the tax net? The business, has it been captured by MDA? So those are some of the things. Let's bring in more. This tax law, it has come to reduce the burden. But main objective is that to bring in those evaders into the tax net. That's some of our objective. If you can bring in your evaders into the tax net, and if you can tax right, definitely our revenue will increase. Thank you.
Sorry, I just want to add this because sometimes you'll not be speaking to only people who are low income earners. As much as that assertion is wrong, that the new tax reform has come to reduce our tax burden, for the high net worth individuals, it has come to increase their burden. So if you earn up to 25 million annually, or within that range, your tax is definitely going to go up to increase. But all of us here, like the director said, our tax will definitely reduce.
All right, thank you very much. So, Mr. Fati, you said one criticism is that enforcement powers may be too strong. You see, how do we ensure enforcement does not become harassment? You know that the NTAA now has empowered tax authority when it comes to the aspect of enforcement. How does it not become harassment?
Okay, thank you. When we look at the new Nigerian tax, I'll just be saying NTAA. When we look at NTAA and our own state law, we'll discover that I mentioned it that the chairman of the relevant tax authorities now have the power to sign the warrant of distraint. That is the aspect that we need to be cautious of how we implement or use this provision so that it doesn't become an harassment. For all the other provisions, the power to call for information or call for books, the power to inspect, to carry out inspection, all those ones, the provisions are still the same. But for the warrant of distraint, now you don't need to go to court to get a warrant of distraint, except it has to do with the distraint of an immovable property. That is, you want to distrain a land. And distraint doesn't mean seal up. It only means seize some goods and seize the goods, keep them for 14 days. After 14 days, if he has not satisfied the established liability, then you can now sell off to recover the tax liability, the cost of seizing those goods and keeping them, and you give the person the balance. I understand it seems difficult, but that is the law. Hello? That has always been the law. The only aspect that has changed there is the warrant of distraint that can now be signed by the chairman, which before now must be signed by a judicial officer. That is only the aspect that has changed. Now, apart from distraint, we also have an action. You can bring an action to recover tax. That's in our state law, under our state laws. For the distraint, you are supposed to have fulfilled all condition precedents before you can proceed on distraint. What do I mean by condition precedents? You must have served notice of assessment, and the notice of assessment must have become final and conclusive. Once it has become final and conclusive, you can serve another notice of intention to distraint. And after then, you can now proceed to distraint. The procedure for distraint, the modalities for selling the goods distraint, that will be discussed at the management level and be communicated to the appropriate departments. But for now, please don't let me depart from the question. How do we ensure that this does not become an harassment? There are so many of us that we take this job personal rather than official. What do I mean by personal? Sometimes you just feel a taxpayer has offended you and you feel this is an opportunity to deal with the taxpayer and you fail to comply with all the conditions precedent and you just go ahead and you levy distraint. You'll be putting the organization, well, you'll be putting yourself in trouble. Don't let me, the organization can easily defend itself that you have acted out of the scope of your authority. And that's why you might be responsible, fully liable for your actions when you use that provision to harass the taxpayer rather than for the purpose of enforcement. And sometimes, when you discover that the goods the taxpayer deals in, they are perishable goods or goods that can expire, you cannot distraint. You have to go through the other means, which is the action to recover tax. Because if you distraint and we are not able to sell within 30 days, it's 14 days. But the law does not say you cannot sell anytime after 14 days. It means you can keep them for 2, 3, 4, 5 months, still waiting for him to come and pay. So if you seize goods that can expire, that will also be that might also be a problem, because by the time maybe you want to sell that's now expired, you cannot sell, you cannot return, we cannot recover money again. So we have to be very careful. Now, there's also the Office of the Tax Ombud, which has been created to balance the power given to the relevant tax authority and the rights of the taxpayers. Now, the tax ombud is just like a mediator who is expected to receive complaints from taxpayers, investigate those complaints, and give recommendations to the relevant tax authority. They do not have the power of the courts. They cannot make decisions that will bind the relevant tax authority. They can only recommend. And they can also sue on behalf of taxpayers, where they have made recommendations to the relevant tax authority and they do not follow that recommendation, they can now proceed and institute an action on behalf of the taxpayer. They cannot interpret laws, they cannot raise assessments. All they can do is just to serve as a mediator and represent the taxpayer and institute action on their behalf. Thank you.
Thank you very much, sir. I just want us to also try and manage our time. So questions from now henceforth is going to be like 5 minutes. Thank you very much.
Let me quickly just say something about this, because I know this statement that has to do with enforcement does not mean sealing shops, and the strain means taking an item. This is not new to us, especially for those of us that have been here before now. We used to seize items. And when we do, this was discussed yesterday, so I don't want you to miss the parts that were discussed yesterday. That's why I'm bringing this one back. During the discussion, a request was made to the chairman that we should have a brainstorming session on this distrain in a way that we'll be able to come up with a very practicable way. The law says we should not, the law did not permit us to lock shops. It's very clear. But yesterday, a suggestion was made that, okay, if we are to distrain, if you go and distrain a shop at Fayoshe Market, you know definitely you have played with a tiger. But if let's assume that a place like Starleg Mall is the 14th, and after all the necessary things, they did not come up with a compliance initiative. If you distrain Starleg Mall, the noise in town will be so much that everybody will say, hey, they have taken something from Starleg Mall, go, let us be careful. They can come to us. So if we want to do that distrain, assuming that is the only way out, we will go for the big shots so that it can send the signal downward. Alternatively, that's not the only way of distrain, of enforcement. We can institute legal action. Our people here, they don't like litigation. So charge somebody to court and let that person go like 20 times before the court will now say, okay, you are fined. Every other person will sit up. So we will find a way around it. But don't let us be discouraged. But please, the sellers of chains and padlocks, they have lost a very huge customer. Thank you.
Thank you, thank you, sir, for that wonderful contribution. So the next question goes to Mr. Ogunsoya. Sir, we as EKIRS, what are the biggest practical challenges that we should anticipate as regards the new tax reform?
Thank you. As we have opportunities in the new tax reform, we also have big challenges. One of the big challenges is that in the issue of this distrain is another big challenge that we are used to stealing. It's one of a big challenge, but if we follow due process, I don't think it should be a challenge. We can turn the challenge to an opportunity. How can we turn the challenge to an opportunity now? Is that let's follow due process. There is some, before now, we call that Jankara enforcement, all this in nature. It is not in line with the law. And apparently in personal income tax, the duty of personal income tax is not to carry out enforcement. We have enforcement department. We have a lot of things that we can do. Serve due notice, notice of assessment, demand notice, follow, notice to carry out the strain or intention to prosecute. When it gets to issue of enforcement, let's move it to legal department or enforcement unit. Let them carry on from that particular area in conjunction with PIT unit. That is the standard practice. PIT cannot serve notice. The same set of department or station, that station will also enforce it, is not the right procedure based on my own little understanding about tax administration. So we have opportunity to go more. Challenges we also have again in terms of getting the relevant information, in terms of filing. Because filing this time around has to do with global income. The person we are assessing now, are we certain that is filing his income based on global information based on global source of income? Then how can we overcome those challenges? One thing we should always, we should not be envisaging problem. If we have problem, how can we solve that particular problem now? These are the way we can solve that particular problem. We share relevant information. If somebody, like for instance now, a particular taxpayer is in adult tax station 1, and you know that yes, the business should be is on HNI, pass those relevant information to the directorate, to the head of department. This person is having another business in Igede, he's having in Ido, he's having another business in Akure. It's a challenge for us to get that global information. But when we share information, intelligent information, we overcome that challenge. So that's some of the areas we should look at. Data sharing, information sharing. If we have that, and if we are working, Barrister says something, we should consider any action we want to do. Is it in the interest of the organization or my own personal interest? If personal interest is off, the major challenges we'll be having this tax reform as EKIRS will definitely overcome it. Thank you.
Any contribution? All right, sir. So the next question goes to Mr. Wasiu. Sir, will this reform reduce or increase revenue leakages at EKIRS? Is it going to increase or reduce revenue leakages? And will it increase or decrease our IGR? And if it does, what should we do differently as EKIRS?
Thank you very much. Incidentally, all the questions you're asking me have been discussed, but I will still talk about it. Let's talk about the revenue itself being either decreased or increased. It has been confirmed that it's going to give us a slight decrease. And suggestions have been made. That's what we should do. We should, one, please let us work with DID more. Let's work with DID more now, because intelligence is what we need now. Technology is the only way out. So if somebody is giving us an information and we have an opportunity to get a better information, better details about such a person that will help our assessments, why don't we embrace that? Let us see DID, because as it is now, because I'm very close to PIT, I've been in PIT and I've always been in PIT. Every assessment now must have passed through DID. So we must know what this person is. What is the worth of this person before we assess? Not that we will assess and DID will not tell us that this is the situation. We now say, that's the best of any, we have assessed him already. No. If we do that, we're going to capture more people into tax now, collect the correct tax. But that is not even the major solution as it is, because we are talking of PIT. PIT, we know that it will drop. But when we expand the band, the tax net expanded, we have more money. That's one. Then we look at the other areas where that are not performing. Other areas within the system that are not performing. From MDA, even our road taxes, something needs to be done. Just pass through the town, you see vehicles that are not registered. You are just everywhere now, just because we are no longer doing enforcement. So the management will do something about that. We suggested something yesterday, but at the back end, because my suggestion then was that we should use the law enforcement agents, like the road safety, the VIO, to capture these people that are, by the time they now capture them, they directed them to us. They are not doing it because the law says don't block road for revenue purposes. But it did not say we should not block road for criminal cases, because security cases, if you don't have number on your vehicle, you are constituting security risk. So, but it is not our duty as internal revenue to go and say, okay, yeah, for security, we want to catch people that don't say, no. The people that are engaged for security, let them do their work. By so doing, it will trickle down to our revenue and we have an increase. So whether it will now increase revenue leakages or increase it, the answer is very simple. Revenue leakages have no place in this reform. Because even before now, we used to have some of our staff that are involved in some kind of malpractices, giving fake TCC, giving fake receipts. That has gone, Abi. But if we still have anybody within the system that is doing that we don't know, the law is very clear. Apart from what the Internal Revenue will do, if anybody is caught practicing such illegal action, one, there's an administrative penalty of how much, okay? 1 million naira. And the person might go to jail for 3 years. And the person might even be charged for both, can have 1 million naira fine and go to jail. Then, before that person will go to jail, the person must have been dismissed from EKIRS. So it's double wahala. So there's no revenue. The system is going to be so transparent that everything will be seen clearly. So revenue leakages, but please let us sit upright. Let us sit tight and ensure that we just embrace integrity and make sure that everything that needs to come to government comes to government. Revenue leakages can happen anywhere. I don't want to go deep, but we know, all of us, we know, we understand. Thank you very much.
Thank you. I want to add something about the leakages at the state level. We all know that we have adopted electronic means. We have automated almost all our collections, even before the new state law was passed. But there's something in the new state law now that has also been criminalized. Even at the local government level now, the issuance of handwritten bills, payments into accounts that are not in the name of the local government or the state designated account is now also a crime. I might not want to mention some particular MDAs, but we still have MDAs in these states that they still write bills with their hand. They will say, because that person is not captured under harmonized bill. You have a revenue officer in that MDA. Go to the revenue officer, give the revenue officer the name of the business, and put the one item you want to put on the bill, and raise that single bill for the person. We all know why such MDAs still wants to be using handwritten bill. That is where the leakages are coming from. Rates, MDA rates are not negotiable. They are fixed in the law. So by the time you write 50,000 where somebody is supposed to pay 20,000 in the law, you are giving room for negotiation. That is what, even before the law reform, SEBA, there's this program of which the state government is subscribing to, State Action on Business Enabling Reform. It's a World Bank grants project where they give loan grants to states. It's not grants, it's loan. Anyway, but they give certain criteria or conditions the state must meet before you can benefit from that program. So under that program, states are mandated up to the local government level to automate all collections. So if you still see a particular ministry or MDA that will still be hiding under the fact that since you are not serving somebody harmonized bill, that's why they use hand to write the bill and serve. Please escalate it. Escalate it. It is our responsibility. It is the responsibility of EKIRS to collect revenue, not the responsibility of MDAs. MDAs are only collaborating or acting as delegates of EKIRS. So if we keep quiet, it means you are a party to it. That's just the truth. There is no revenue officer that will be exonerated if your MDA the MDA you are in charge is still issuing handwritten receipt, or they are still collecting some money into some accounts that are not government accounts. So leakages for me with the federal reform and the state reform is gone completely. Thank you.
I'm sure some of us would have questions that you want to ask. Kindly write down your questions, give it to the HR personnel, they will collect it from you. You can do that now. You can start writing out your questions. Thank you very much. Thank you so far for the contributions. We are so grateful. And I hope we are all learning. All right. Mr. Fata, this question is for you. You know that some of our staffs, especially those who are outside Ado-Ekiti, they would have to interface with people who run small businesses or the market women or market men, as it might be. And they would need to speak to them regarding some of the tax reforms. And they are the ones that would actually raise noises. They are the ones that would have one issue or the other. It's always those people who are small business owners. They are the ones that peddle around the wrong information too. So, if you had to explain this reform now to a market trader or a small business owner, so that many of our staffs who are seated here would know how to present their cases, what would you say to them? Just a few minutes.
Okay, thank you. If I have to explain the tax reform to a market woman, market trader, in simple terms, I'll let them know that they might not pay any tax if they keep records. And the reason why I add if they keep records, when the director was speaking on the slide, he has analyzed presumptive tax regime. So I don't need to waste time or go into that. The presumptive tax regime, he has explained in detail. Those who are not keeping records because of the nature of their business, and those whose annual turnover is below 25 million and they are not keeping records. Now, if they don't keep records, there is no way you can ascertain that they have not earned more than 800,000 on their business. And that's why I added that caveat. Because if you just think low-income earners have been exempted, Alata, Oniyo, we have been exempted. No. You need to explain further to let them know if they don't keep records, they might still have to pay tax under that presumptive tax regime, which is now taxing their turnover and not their income. You know, we cannot ascertain their income. That's why we want to tax their turnover. And when you look at it at the end of the day, their income might actually not be up to taxable income. Might not be up to 1 million. Because when you add deductions, that 800 is actually looking like 1 million. By the time you remove deductions, you have 800. So that is one. Secondly, I need to enlighten them that exemption from income tax is not exemption from local government rates, market levies, or other MDA's rates, if it is applicable to that particular business. I also need to tell them that they still need to pay development levy. I think development levy is okay. Income tax is owori. So while you are exempting them from owori, you let them know they are still going to pay a token annually, one-off, as their development levy, which I think the minimum now is 1,000 in the new State Revenue Administration law. So you have to look at the particular category of persons you are talking with to look at their rates, to know what they are supposed to pay. And when the director was talking, he said we need to look at other areas. Let me tell you the truth. The shortfall that this exemption will bring about, if we are able to get development levy from every resident in Ekiti State, you'll be surprised that it will cover a little of it. We are talking about those that are not in the tax net at all before. So by the time those people, even if they are not going to pay tax, like even if they are not handing up to 800, if we can still bring them in, people will pay that development levy voluntarily. They will look at 1,000, 2,000, okay. That one is even better. So they still need to pay that. Now for the small, have I answered your question? Can I stop here? Or I don't want to. Okay, thank you so much. I don't want to go into the company part because by the time I go to small businesses, I'm going into the company part. I want us to focus on what concerns us because of time as individuals.
Any contributions?
No.
The next question has been answered. So, Ella, can you go to 10? Okay, do you have questions from the audience? Contributions? Okay, this one. Okay. Please. Okay.
Number one. Eh?
No,
System man. Okay. I want to ask. Anyone to answer it? I can answer it.
We are seeing so many questions just trooping into to us here. We don't really have much of the time. So what we do, we pick some few ones. But the good thing is that all of us here on the side of the table, we are an insider. We are people you can meet. So you can meet us if your question has not been answered. We will take care of it. So if your question is not answered, please don't be offended. We just have to keep to time. They are giving me signal at the back. Thank you.
Thank you, sir. The question here is one, on PE and PIT. Hello? If the first 800,000 is tax-free, what happened to the balance of 40K? That's 40,000. On it for the person earning 70,000 per month, for somebody earning 20,000, for 70K per month, is 40,000 not taxable? Let us not rule it out. The essence is for training. The person that is asking the question is not clear, and let the person be clear. We can't just rule it out. What the law says is that let us get it clearly. In the tax law, it is 800,000 in the tax law. There's no exemption for 800,000 in the tax law. What the law stipulates is that anyone, any minimum wage and below is exempted from paying. I have the reason why the person is asking that question. If you look at the table, the director display, we have 840. Then we are not saying that 800,000 is taxed at 0%. So that's why the person is asking question to get more clarification. In the tax law already, the director said it. Anybody, any minimum wage. If today, if the minimum wage, the federal minimum wage will increase to 150,000, that's some of the gap we have in the tax law. If the tax law is in the minimum wage is 150,000 naira today, anybody earning 150,000 naira and below is exempted from paying PE, personal income tax. That's what the law stipulates. Anyone, any minimum wage and below. So the 800,000 that you are seeing as times 0% now on the tax band is not the gross income. It is the taxable income. After you have calculated somebody, like for instance, somebody that is earning 1 million, 1 million times 12 million naira. Then all the deductibles, the statutory deductible, NHIS, and NHF, and the insurance, that is life insurance, owners, occupiers, rent relief, all those ones. If you remove it, the balance, that is the taxable income. That's where so everybody, all of us here that we are here, irrespective of your income, your first 800,000 of your taxable income is taxed at 0%. So that was your first clear. If you are earning 10 million naira on monthly basis, your first 800,000 of your taxable income is taxed at 0%. So that what is indirectly covering the CRA that we are having in the past. So that's for that. Then somebody asks on small business. Somebody asks on small business. On small business of 100 million tax free, is it applicable to VAT or PIT of the business owner? I love this question because it's causing a lot of, it's one of the major misconceptions. People believe that when they say small business, if your turnover is 100 million and below, you are exempted from paying income tax. Then your asset base, capital asset base is 250 million naira below. You are also exempted. For the income tax that you are exempted is for corporate income tax, which is your company income tax. This is applicable to registered company. That is limited company, that your turnover is less than 100 million and below. I believe you are getting it. It's not applicable to personal income tax. It's company income tax. So let's get that clear. It's company income tax. And the essence of doing that now is that the federal government are trying to formalize business. They want to encourage unregistered businesses, unstructured business to get structured and formalized. That is the essence of introducing that clause. So question 3 and 4 will be answered by my director. Thank you, sir.
Thank you. Let me just make a comment about the 840-800 dichotomy. If somebody is earning 70,000 naira per month, you don't need to even bother yourself that you are doing calculation. That person is not supposed to pay tax. Now, let's now look at a situation whereby somebody is earning like 100,000 a month, which translates to 1.2 million, right? And we now apply deductions. We take rent relief, we take pension, we take this, we take that, and the remaining money is now 840. The first 800 is tax-free. The remaining 40,000 will be taxed. So I hope this will answer that person's question. There are two different things. If your taxable income after deduction is 840, the 40 will be taxed. But if your 840 is your total income, translating to minimum wage, is tax-free. Clear? So another person is asking question regarding the tax ID, and this one is a scenario question that is really affecting us. The person said, if there's a tax ID that is harmonized and we are supposed to be using it, why are we still using EKIRS when we are filing our returns? I decided to pick up this question because this thing has been discussed at the management level before. So, and the answer is very simple. Currently, as we speak, we only know our taxpayer by their EKIRS. We don't know them by the tax ID. So the decision of the management is that when they are filing the returns, they will state their EKIRS and state their NIN, and if possible, state their tax ID so that we can be able to merge this together. If somebody is giving us a return and is putting the tax ID, seriously, we might not be able to know that person because we don't have that record yet. The record that we're supposed to get from the JRB is not yet with us. So on that note, we will still be using the EKIRS parallel to the tax ID. I think that's we answer the question. And NIN. Now you see, NIN generates tax ID. Who has done that on his own there? NIN generates, it's just a kind of, you use your NIN to retrieve your tax ID. It's already there. Now, if we have your NIN and we have your EKT, are you getting me? We can go to match this together and use it to get your tax ID when we get details from JRB. But I think, Madam Yemisi, we want to say something on this matter. Because the sign language you are giving to me, I don't understand the Okay, that's just the issue. We are requesting for the EKT because we want to be able to match the other details with the EKT. That's the answer to that question. Somebody say I should talk about the rent relief. And example, the person gave an example of staff on grade level 7, step 2. Will not receive same salary. What the person is trying to say is that you have 2 staff that is earning the same amount. They are on the same level. But because of rent relief, if me, as one of the staff, I'm paying rent 500,000 naira, and the other person on the same level, his own rent is 1 million naira. By the time the relief is applied, we will not earn the same salary again, no. Abi? So that is it now. It's just based on the relief that you get from rent. Who pays more, gets more. Who pays less, get less. So that answers the question. I don't think that is an issue. But if you want to be earning the same salary with your level, then pay the same rents that person is paying so that you can be on the same page. And this issue of rent relief is not only about the rent, the relief, or the salary that the person is going to collect. When you want to claim rent relief, there are criteria. So you must submit details of your rents, which will include the name of your landlord, the EKT of your landlord, so that at least if you cannot get money from you, we are dropping money for you, landlord will now pay the difference because landlord has been hidden before. Is that do we get that? So it's not automatic. Oh, you don't just get rent relief. You will get rent relief when you give details, and the details is going to be useful to the internal revenue. Thank you very much.
Okay. The first question I have here is, what is your advice to a school owner who said he has been advised to go and register his business under a limited liability company so that he would not pay personal income tax? How? To me, it's putting, if you go and register your school as a limited liability company because you don't want to pay personal income tax. Personal income tax is different from company income tax. Directors and shareholders will still pay personal income tax, and they will end up paying company income tax. So it's double jeopardy for that person. And if you know, company income tax is taxed at 30%. The highest band on the personal income tax is 25%. So why not stay on your business name and pay 25 and pay according to the tax band? If you don't even make up to 20 that they are looking at, and the 100 million will exempt them from income tax, from company income tax, but they'll still end up paying personal income tax. Because at the end of the day, if the company has made income, who owns the income the company has made? It wouldn't be shared as dividend. Would they keep it? Would they keep keeping it there? It will be shared to the shareholders now. The directors will be paid. So at the end of the day, you still pay the personal income tax, even if you are trying to avoid, because of the threshold. Fine, you will not pay company income tax, but you still end up paying personal income tax. That will not take you outside the jurisdiction of the state's SRS. Then the other question Did local government rate authorities still have right to collect money from taxpayers because they've been disturbing market scouter 100 naira since beginning of the year 2020, and they have not been collecting loading permits? So for this one, local governments still have power to collect some levies from taxpayers, but not income tax. They will still collect their shop and kiosk rates, their store fee, their daily market fee. They are still entitled to collect that one. If you need clarification on this, just look at that law, the new state law that has been passed, and go to the first schedule. Then development levy is one-off annually. Why do salary earners that also own a business still pay development levy? Why paying for his or her direct assessment, despite that it has been deducted from the salary for that particular year? I think this one has to do with when somebody who has a business wants to collect TCC and is being asked to pay development levy, and is also a salary earner, and he has paid once as a salary earner. This is a bit technical. I don't want to make a categorical statement that he's supposed to pay only one. I don't want to make that statement. And the reason is this: for his salary grade or level, he has a development levy, an amount. Now, for that business he's running, the person running that kind of business also has another development levy, which rate is even different from that. It might be different from his level, what he pays, depending on his grade level. So I don't want to say he is not supposed to pay the two. And I don't want to say he's supposed to pay the two.
Let me quickly say something about that. If you are conversant with the development levy being deducted from salaries or from salaries, civil servants own, precisely. For every one of you who has been a civil servant before, have you seen your receipt of development levy before? So if you want to get something, the receipt is not there. They pay the money in bulk. So now you want to get TCC. And somebody is now saying, the requirement is that you must have a receipt of development levy. If anybody now complain on that, I don't think there's any, that person does not have any points, because you just ask that person to go and bring the receipt of the one he paid in civil service. It's as simple as that. If he's able to get that receipt, then we will grant it. Does that answer the question?
From the point of view of a tax administrator, that is right. But in the other way around, it could be arguable. So let's leave that. How will taxpayers claim their rent relief? Also, how do revenue officers identify rent falsification by taxpayers in a bid to reduce liability? Intelligence now. You are earning 100,000 in a month, and you say you are paying rent of 1 million because you want to collect 20% rent relief. I think that one is something that our intuition and we should discover that on our own. And claiming the rent relief is by filing. If you do not file, you do not have any relief.
If you earn 100,000 a month, which means 1.2 million a whole year, Abi, and you are claiming that you pay a rent of 1 million, right? So invariably, it means that you have other sources of income. It's simple. So what we need to do is just take that your expenses back and take it as income. Add it to the 1.2 million, then tax you. It's as simple as that.
And just the simple answer to that, there's no even need for us to be even flogging ourselves on that. Go and reach offenses and penalty for providing false information in terms of either tax refund, VAT refund, or false declaration. You are putting like all this rent relief, you are giving fake information. The penalty is 1 million naira, or 3 years imprisonment, or both. So if you want to claim maybe something that will not reduce your tax liability, maybe irrespective of using that 500,000 naira, you have the maximum. And I doubt if there's anybody that is in Ekiti State, internal revenue, that we have that maximum. If you just the fraction that you reduce may not be more than in a year, may not be more than 10,000 naira, 15,000 naira. And you just because you go and doctor document for counterfeiting document is under criminal offense. And I want us to understand that any act we commit as an offense under the tax law, our learned August can confirm that again. Any act you commit under this Nigerian Tax Act is a criminal offense. It's not civil offense. Criminal. Am I right, sir? So it's a criminal offense. It's not civil. So we should be careful. One is either in helping somebody or in helping ourselves at the expense of the tax authority. So the question here with me is that, can someone who has a business in multiple states pay through a single tax ID as he has business in Lagos, Ondo, and Ekiti state? That is the essence of the national tax ID. The essence of national tax ID is that to harmonize all information. It's just like having a bank account. You can open an account in Ekiti here, deposit your money in Ekiti, go to Lagos and deposit, get your withdrawal everywhere. Irrespective of any state you pay. But however, the issue of residency is still in place. Residency rule is still in place for your income tax. But you may also have some business like you may in Ondo, you want to pay in terms of levy in Ondo, you want to pay in terms of rate in Ondo or Lagos levy rate, but your personal income tax, it is where you reside, your area of residence. That's why you pay your personal income tax. Then the second question is that what is the role of third party tax agent like bank? That would really say it is individual. If individual fail to pay PIT, his bank account will be put on post no bill. That is misconception. It's a misconception. No tax authority, our legal people can also confirm that if I'm right. No tax authority can just single-handedly write bank that they should post no debit that on that particular person's account. It must follow judicial process. That is, and a lot of misconception that is happening is that, like this morning, I just rushed to the market to purchase plantain, and I told the woman that 2,000 naira plantain that me the cash she can transfer. I was talking about transfer. Mama jawo mi ni o. I just laughed. I'm like, okay, even go here. Gonna say is just misinformation. She now said one thing. Okay, if narration see, swine. Narration see. So if you are looking at issue of bank issue, it is when every process has been carried out. Like now, somebody object, which we are doing presently. If you object to a tax liability that you have this, the tax authority can request for information, supply relevant information. In the course of supplying relevant information, they can ask for bank statement, ask for detailed account. In the process of scrutinizing you, and even though when you don't pay, a court has given judgment. A court must give judgment. If you go and read tax law, there must be a judgment from when it is final, conclusive, and judgment has been given in respect to that. Now, that is when they cannot say, okay, link to an account. It's not that they will just tax authority will just wake up that they should go and place link to an account directly. No, there is a judicial process. It's not a direct order. Thank you.
We are going to round up this discussion in the next 10 minutes. So whatever question we can be able to answer in the next 8 minutes, we will stop answering questions and declare the session closed. So, Barrister Fati.
Now, the question here is, with respect to ticketing for motorcycles and motor vehicles, has the new tax reform abolished it or harmonized it? This is part of the collections that I said you have to look into our own state law to know the provision on this. Going forward, the state government, that's the EKIRS, will be the one collecting these taxes, and it will be shared with the local governments. Daily ticketing is still in the law. It has not been removed. But local governments cannot collect, and state government will still collect. So in the new state harmonized tax and levies approved list of collection, what you see there is the collecting authority is the EKIRS with the power, with the sharing of the revenue with the local government. And this question is, I read that people into agriculture will only, we have tax holiday. How true is that, sir? Okay. Now, this is in respect of only companies that are into agricultural business. And if you deal in crop production, livestock, all these agro allied processes, you'll be exempted from paying company income tax for the first 5 years. I repeat, it has nothing to do with personal income tax. It's in respect of company income tax. If you place yourself on the salary, if the shareholder gets dividend, if the directors get their fees, they will pay their personal income tax. Then, on the issue of MDAs collecting revenue into individual MDAs accounts, rather than IGR accounts, all in the name of revolving accounts for running of such MDAs operations. What is your take? I have said it here. It is possible that there are still some MDAs authorized by the state government to collect certain fee in some accounts that are not the main IGR accounts. I think I have an example of such accounts. If you are applying for allocation of land in the Ministry of Lands, there's a money you pay into the IGR account, and there's one money you pay into another account. That one is valid. That one is valid. If you experience such in your MDA and you are not so sure that to know whether that account is authorized by the state government or the AG, just escalate it to your director. Your director will escalate it to the chairman. There are some that could be open with the consent of the governor and accountant general, with their approval. It is possible. And that is why you just need to escalate to the director. They will do their findings and know whether it is right or not. For example, the judiciary, they have some accounts where they collect money. And that one is also permissible, is with the approval of the government. So you need to just be sure whether the government is aware of this or not. So you need to escalate. You don't have to keep quiet.
Yeah, in addition to what he just said, especially as regards Bureau of Lands, the account they are paying 200,000 naira to for developments, land developments. It's not paid directly to IGR accounts, but it's being reported. But that particular payment gave us a little boost yesterday, because when they gave us the details, we saw about 85 million naira that was added to our collection for December, which gave us a very good stability. If that one no come, no trouble. So, but approval is key. MDAs, please note. I actually work with Accountant General's office on this, and our agreement is that we should ensure that we get approval on such an account. If we can see it, that governor approves it, then we let go. But if it's not approved by government, then we can escalate. Example of that one that is not approved by government is the one of the IPP, Independent Power Projects. They have an account they were collecting money into. In the wisdom of Mr. Chairman, he said we should go and investigate. Is this account a revenue account? And we found that it's not revenue accounts. We asked again, do you have approval to collect money into this account? They said, since the revenue account is not ready, they are just collecting into it. Then Oga said, stop paying. We did not pay for like 4 months. We just got the accounts last month. No, yes, this month. January, that's when we now saw the account. So all the money will be moved, that the one they have collected will be moved to the revenue account and will be reported by end of January. So those are the kind of issues. But if you don't speak out, we will not know. That is the key. Okay, we have only 4 minutes to go.
This very one is very key. So that I want to contribute also, because I've been in MDA department before. And area we are looking at to improve our revenue is MDA department, generally collection from MDAs. Please, you can do the service and the state a lot of good if you can pass relevant information in respect to any observation you see in terms of leakages to the relevant department, the head, the director, even to the chairman's office. Like for instance, now you have, when I was in MDA, I have a lot of barrister, the legal advisor, a lot of information. Sometimes we just tell you, Ambassador, please help me confirm this account. Is it being a former account that we are reporting? At the end of the day, when I was in MDA department, we collated a lot of more than 20-something accounts that is being operated by MDA, was given to the executive chairman. The chairman took it to the Commissioner of Finance and AG office, and a circular was written to all MDAs to post all those transactions into the revenue account, and they should stop forthwith. So there is the possibility that some of them might have also introduced another account. So if you have any opportunity that, yes, they are making some payment, you are not certain that if it's revenue account, go to the head of the department, go and confirm, give it to him. He will make necessary inquiry. You can even come to planning statistic research. They also have details of the account. So when they make inquiry, if it's not the approved account, a letter will be written to the right source for them to stop with. And if there is sanction for that, that is not our own part of it. The government will do necessary things. Then there's a question from one of our guys here. He said, is there any penalty for agents that misinform taxpayer in order to convince them and make a gain? One area I want to look at is that one thing that we have to do is that anybody have a lot of information they can pass across to anybody, misconception. As a taxpayer, we are enumerator. We also create awareness and tax education. We can, if somebody is creating misinformation, we can now correct the person that no, this is the right information. That is one. But there is penalty for somebody that have misrepresentation. If you try to aid and abet in the law, check section 117, 118, and 119 of Nigerian Tax Administration Act. It's talking about when you aid and abet, obstruction, when you obstruct a tax authority, tax officer to carry out their act, all the penalties are there to protect us. And majority of those fines, we have some that are lower, but for these 3 sessions I have named, 117, 118, and 119, we can check of NTA. The penalty is that 1 million, 3 years imprisonment, or both. Thank you.
You know, when I was giving my presentation, I said there is someone among us that is an expert in penalties, offenses and penalties. So he's ambassador. If you want to get any penalty for anything, just ask him. He will tell you the he will tell you the section and the law. At this juncture, we thank you everybody for listening, for participating. I believe it has been impactful. We will be calling the session to an end at this point. So thank you all. God bless you till we meet again. Thank you.
All right. And those of us who have questions that were not answered, the HR department is going to collate it. The questions will be sent to the discussants. They will answer and it will be posted on the group. Thank you very much.
Can we appreciate these professors again?